Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, for the second straight day, S&P implied vol is doing something very different than what the S&P market's actually doing. Right now, we have S&Ps down about 0.5% on the day, but yet the VIX is down 3.5% on the day. What gives? I mean, is VIX no longer a fear indicator? Is it no longer giving us an indication of what's going on? It is. Let's keep in mind something. At the beginning of the week, we had two foreseeable risks in front of us. We had the U.S. election and we had Europe. Now that the U.S. elections are behind us, and now that the Greek bailout package has been pushed further to the end of November, November options, especially in equities, are trying to figure out how to apply risk to the options right now. So we're seeing a deflate in the November at the money options especially. So really, VIX is down 3.5%, but keep in mind, January through March vol virtually unchanged, June outwards to a year and a half, actually up on the day. So VIX might be down, but it's not a true picture of what's really going on with the implied volatility across the curve. Moving on, in the foreign currency markets, we had the dollar largely higher on the day from the very beginning, yet volatility in most currencies are down about 1.5% on average, with the exception of the Australian dollar, which is unchanged on the day. Moving on to oil. Oil's largely unchanged, about $85 a barrel. We're seeing implied volatility down about 1% on the day. A lot of that has to do with some big strangle sellers that came in towards the end of the day in the oil pit. Lastly, gold. Gold rocketed up $20 on the day. We're seeing volatility there up 2%. Now, the story to gold vol is, again, there's a lot of buying interest in that 1775 to 1800 strike, moving skew lower, however, moving implied vols higher as options traders are trying to hedge against all the short positions they built up in the out-of-the-money calls. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.